chat. I may see it, I may not, but if you put it in the Q&A, that's exactly where I will definitely see it. And also, I want to let everybody know that if you go log in at the blackstockmarketprogram.com, you can check under what Dr. Boyce is buying, and you can find a list of stocks that I just popped in there. And last but not least, those of you that are doing stock options with us in the Prime program, the Moneymaker Grid is almost done. The new Moneymaker Grid is coming. It's a little more complex because right now so many companies are releasing their earnings. So I was trying to debate how I wanted to incorporate that into the Moneymaker Grid because the goal of our Prime program is to help you generate income, and that's it. And so by sort of including these earnings announcements, it kind of throws off the equilibrium a little bit in the strategy. So I kind of want to figure out a process that doesn't impose too much risk. I don't like risk. I want you to be safe financially, and so that's going to take some work. But anyway, how's everybody doing? I hope you're doing well. I wanted to start off by telling you guys something about the economy as it pertains to this next election. Now, a lot of you have asked me, who's going to be better for the election? Who's better for America financially, Kamala or Trump? Let me just say this, that what most experts are saying is that they are very disappointed in both candidates when it comes to their economic policy. They both presented their plans in terms of how they plan to spend money, how they plan to grow the economy. But what's happened is that they did an analysis and they found that basically Kamala's plan was going to increase the deficit by a certain amount. I forgot how many billions of dollars it was going to be. It's already way too high. And that Trump's plan was going to actually increase the deficit even more than Kamala's plan. So both candidates right now, if you ask most experts, both candidates have plans that are not going to be good for the deficit. And now remember, the deficit and the debt are two different things. The debt is the total amount you owe. The deficit is the difference between the money you bring in and the money that you spend. Let me know if you know the difference. Give me a guess if you're clear on the difference between the deficit and the debt. Remember, the deficit is basically whether you're at a premium or a surplus, and really the debt is just the total amount of what you owe. And so the debt is incredibly high. It's going to keep on going up. Politicians love to spend money. They don't love to cut things. They don't. It's not very popular to cut things. So what they're kind of doing, unfortunately, is they're going to really destroy the country because they're also short-sighted. None of them are thinking about, what's going to happen in America 20 years from now. They're all thinking about what they want to do right now. In fact, the reason that we're in the problems in the difficulties that we're having now is because in 2001, nobody was thinking about the future. Everybody was thinking about the present. If you really want to know a little bit of the history of the national debt, which is way too high right now, if you go back to the 90s, we had actually achieved a surplus. The Clinton administration had actually gotten us to a point where our income exceeded our expenses. So we were living within our means to some extent. At least the debt wasn't getting any bigger because the deficit was turned into a surplus. So he passed this surplus on to the Bush administration. The Bush administration, and it's really interesting because Republicans like to brag about how they save money and all this stuff. The Bush administration is actually what caused massive deficits because what happened was the first thing that they did was they pushed through tax cuts because Republicans tend to take care of rich people. And as they passed through these Bush tax cuts, right after the Bush tax cuts is when 9/11 happened. And once 9/11 happened, that just threw everything out of whack because we spent 20 years funding, a couple of ridiculous wars that cost several $1 trillion in wars that we could not afford, wars that we didn't even win. And then on top of that, if you remember right before Obama went into office around '07, the whole mortgage-backed security market crashed. Does anybody remember that? And so the stock market goes south, the economy's going south, the whole economic systems kind of headed off a cliff. And they did what they typically do in Congress, which is bail out the rich people. So they borrowed $700 billion and they gave it straight to the banks. Nobody went to jail, even though somebody probably should have, because what they did was pretty illegal. And then that leads us up to 2020, and you know what happened in 2020. You had the big pandemic, which was yet another scenario where the money was misallocated. too much money was allocated, et cetera. They did not have to spend that much money to get us out of that pandemic. It became a money laundering process because what happened was these so-called public-private partnerships, where the government will partner with pharmaceutical companies and they'll say, "Hey, we need y'all to make us this shot so that we can all be safe." Which actually the shot is questionable as to whether or not it really did its job. But these companies were somebody has to pay for these things. So the people that were paying was you. You were paying, and you were sending money to the corporations. And again, this is one of the reasons why I tell you guys to be stock owners, because my wife and I hold stock in Merck. I believe it was Merck, and that freaking stock went berserk during the pandemic. That stock went crazy during the pandemic. Let me see if I can. Or maybe it was Moderna. It was Moderna. Merck too. Merck, Pfizer, all of them. But Moderna was the one that really got my attention. I want to show you all what happened with the Moderna stock that we had during the pandemic. So let me pull it up on the screen because I want you all to just sort of see just the money laundering that happens in your government. It's quite fascinating. And again, my goal is not so much to tell you what you should believe or not believe. I don't care who you vote for. I really don't. I just want to tell you the economic realities of what's happening here. So if you look here, we own Moderna stock at this time. I had some money with an investment advisor at Merrill Lynch, and he picked some Moderna and put it in our portfolio. I said, okay, this sounds good to me. And look at the stock. Look at what happened. Look at what happened in 2020. So you go back to say 2019, that stock's trading at $17 a share, and then you hit the pandemic. At the peak of the pandemic, it was up to $449. Do you see that? I mean, insanely, insanely high. And this is September 10th, 2021. Now, this is I'm gonna brag a little bit and make myself appear smarter than I actually am, because I'm not because you really can't predict these things. But right around this time was when I said to my wife, I said, this stock market is going bananas. Let's sell some of the stock. Let's go buy some real estate. So we sold a chunk of our portfolio and put it down on real estate. And we sold a lot of that stock like right around this time, right when the market was really just insane, just insanely high. And so some of the Moderna was sold during this time, and now you see the stock is still trading far above where it was in 2019. It's still trading in the 50s. So even if you held on after it collapsed, it pretty much collapsed. I mean, you go from 449 down to below 100, that's not a good thing. And this is sort of the post-pandemic what do they call it, withdrawal, like a drug addict has withdrawal. They're dealing with financial withdrawal. So that's why now, if you notice, every year they're marketing, those shots. They're trying to they're like, damn, the times are really good. We were really making money when we had everybody scared and everybody was buying this medicine from us. And now they've sort of tried to make it part of their consistent revenue stream, because this is what companies do. This is how businesses think. And again, I'm not telling you what you should think about any of this. I'm just telling you what I saw, what I believe, in my perception, my truth. So ultimately, the pandemic didn't just cause massive inflation, because that's what happens when you just pump money into an economy in a reckless fashion, which they did. It was very, very sloppy, but also it pushed the debt up even further. And the deficits are insanely high. The national deficit every year, in terms of the amount of spending that exceeds the revenue, is about $1.8 trillion, which is just holy crap. And there's a guy named Paul Tudor Jones. Paul Tudor Jones is a billionaire who made a recommendation that I'm going to share with you that I agree with 100%. What he says is that based on the analysis, both Trump and Kamala are going to increase the debt by a massive amount of money. That most people expect that no matter who wins this election, both of them are going to increase the deficit. Trump more so than Kamala, which is again just highly ironic, because Republicans are known for being efficient with money, but they're not efficient. They spend money too. And then the other piece of that too is that Trump's tariffs. If you've ever heard him speak, he speaks a lot about tariffs. Tariffs are basically taxes that you put on other countries' products as they come into the country. So it's part of a economic nationalism that sometimes makes a little bit of sense if you're protecting certain industries, but it doesn't make a lot of sense when you're talking about the price of consumer goods. So one thing about tariffs is that they will protect your economy, but then the big debate is at what cost, right? So what ends up happening is that Trump is expected to not just increase the deficit, but he's also going to increase inflation. Kamala's plan is expected to increase the deficit, not as much as Trump. And because she's more global oriented, if you whether it's a good or bad thing, she is more globalist. Trump is more nationalist. Then you would see prices lower under Kamala than with Trump. Um, Either way, though, two investments you can make to defend against this, and Paul Tudor Jones mentioned this, and I agreed with him. I was already doing some of this, so I think it's worth talking about today. Is if you buy gold and Bitcoin. And he didn't mention this, but I'm gonna add in silver. Gold, silver, and Bitcoin are three things you can invest in, and real estate as well, really, that can protect you against that. So there are different ways to do that. With silver, they have in a silver ETF. The ticker symbol is SLV. SLV. In fact, now that I think about it, I got to hop in my account and buy some more. But SLV, silver is expected to really do well in the next few years. Gold has been doing extremely well. Let me see. The ticker symbol for gold for the ETF is GLD. GLD, that gives you exposure to gold. And I want to look at the price of gold because I know it's been going up a lot. And then, of course, Bitcoin. You can buy that on Coinbase or Robinhood, stuff like that. I buy Bitcoin consistently. I dollar cost average into Bitcoin. That's kind of how I sort of participate with that. And these might be things that can help you to prepare for the future. All right, so here is the price of gold. You see, the price of gold is $2,753.60 now. If you go back a year, it's gone up with 38% in the last year. Last 5 years, about 82%. But that's really nothing compared to, like, say, if you look at Bitcoin for the last 5 years, if you'd invested in Bitcoin the last 5 years, your ROI would be 625 percent, 625%. If you look at something like, I don't know, Apple, let's see what that would look like. Let me see here. Hold on, price of Apple stock. If you had invested in Apple over that same 5 years, let's see what your ROI would have been there. 280%. Okay, so Bitcoin did better than Apple, but Bitcoin has a lot more volatility, and also at the same time, past performance is not an indicator of future performance. So don't think that because it did well in the past, it's going to do well in the future. Don't get caught in that trap. But I do think that some of these investments can be beneficial. Now, Armando out of Owensboro, how you doing, man? He says APLD is still going strong. Okay, Applied Digital, is it? I know I own Applied Digital. I just haven't looked at it. Let me see what Applied Digital's been doing. APLD. APLD. Um, okay, it's $9 per share. It's gone up 30% this year. That's nice. The last 6 months, it's gone up 235%. Holy cow. Nice. Good for you, man. I'm glad to hear about I love hearing about people making money, man. That stock has go, but the last 5 years, that freaking thing has gone up 12,000%. 12,921%. That's crazy. Now, someone asked me, who do I think will be a better president? I don't know. I'm gonna leave that up to you. It depends on whether you agree with the person. It's not so much about qualify. I think both of these individuals are qualified in their own way to be leaders. Kamala was the Attorney General of California. That's pretty impressive. Trump, has been very wealthy for a long time. I know people like to make fun of the fact that he has six bankruptcies, but to me, if you run hundreds of companies and only six of them went bankrupt, that's not so bad because billionaires go bankrupt, have bankruptcies all the time. Elon Musk, I'm sure, has bankruptcies on his background. A corporate bankruptcy is not the same as a personal bankruptcy. If an individual goes bankrupt, yeah, that's a different kind of thing because if you're talking about a person who has a regular job and a regular house and a regular life, then yeah, one bankruptcy is bad because you have one entity and that entity is you and your bank account and that's it. But when you are doing business in a way that a Trump does business, he's got stuff happening all over the world. He's got hundreds of businesses, maybe thousands that he's connected to around the world. So a few bankruptcies are going to happen. It's just part of business, And so I'm not saying that this makes him a wonderful guy. It doesn't. I can tell you if you want to, if you're, if you want to hear a biased perspective on the other side, he's been involved in a lot of aspects of corruption. I would say, when he bought a $400 million building when he was 28 years old, that was at a time where you can really get a lot of construction projects done unless you dealt with the mafia. So you can't. I would bet every nickel in my bank account that Trump has done business with the mob. When you get into casinos and boxing and all that, that's very mob oriented. There's a reason why he's done this business with the Russians so much. So there is a corruption there, right? He's probably influenced by something in Russia, maybe Vladimir Putin or whatever. So there we go. So if you're looking for my Trump conspiracy theory, there you have it. Because I get tired of people saying that you're a Trump supporter because you're not on the Kamala Harris bus, or that you're a Kamala supporter because you're not on the Trump bus. I don't get on nobody's damn bus. I'm on the black bus. Okay, the black bus is the one that I want to be on it, and I want to help drive it, because I don't believe that either one of these political parties is going to fix our economic situation. That's up to us. That's my belief. In case you're new and you don't know these things. All right, so let me hop in and answer some of your questions. Now, do me a favor, put your question in the Q&A section so I can see it. And I will grab questions out of the Q&A section. Until then, what I'm going to do is I'm going to grab some other stuff here and kind of go through some of what's happening in the financial news and kind of give you an interpretation that can help you in your investing. Don't forget that I sent you guys a list, or actually it'll be there. It'll get to you this afternoon, actually, a list of stocks in the nuclear power industry. Nuclear power is going to be really big because these AI data centers are sucking up a lot of energy, and so you'll get that if you're a part of the Money in the Morning crew. If you want to be in that group, or get that message, that information, text the word morning to the number 87948. Text morning to 87948. In case you don't know, we do Money in the Morning economic elevation, where every day at 10 a.m., 7 days a week, we wake up and we talk about money, wealth, economics, period. And so text morning to 87948 if you'd like to receive that list. I will text that list out to you later on today. All right, so let's see here. The IRS is announcing new federal income tax brackets for 2025. That's interesting. Good old IRS. In fact, that's why a lot of people start businesses, is to reduce taxes. You don't actually have to own a home to get a tax write-off. Like, a lot of people grew up believing that the only way to have more wealth is to be a homeowner, and that's just not true. You don't have to own a home. You just need something that you can write off. And if you have a business, then that allows you to take money and spend on things that are going to help the business, but also help your life. If you have a family business, you can have family business meetings, but you just, might decide you want to go meet on a beach in Mexico or something, right? And again, you don't want to do tax evasion. Tax evasion is illegal. Tax avoidance is perfectly fine. And so having that LLC is a great way to reduce the tax bill. One of the interesting things about America is that the rich people and the billionaires and the corporations don't really pay the taxes. It's really the working class people. The working class people get taxed the hardest, and that's one of the reasons why the government is crumbling financially, because the revenue that they receive from the working class is not high enough to make up for all the expenses that they have, where they're literally spending money feeding wealth back to the billionaires. That's what they do. Like Kennedy, who was running for president, did a really good job of explaining how the federal government's kind of a money laundering operation. And he said, so when you hear about them giving like $50 billion to Ukraine, they're not really giving $50 billion to Ukraine. They're actually telling Ukraine, hey, we're going to give you $50 billion, but you need to spend that money with Lockheed Martin upgrading your weapon systems, right? So, yeah, we're going to fund your little war, but you got to get your equipment from these American manufacturers and suppliers. Well, why would they pick Lockheed Martin, or why would they pick Boeing or Raytheon to do these jobs? Well, because Raytheon and Lockheed Martin, I bet you that if you go down the list of the companies that gave money to the people in Congress, in the Senate, and also in the White House for them to run for office, they were investing that money to get that money back through the money laundering operation. So for us, voting is maybe an act of passion or civil obedience or whatever it is. For them, it's an investment. It's like, okay, we're not really going to vote that much. We're going to vote a little bit, but we're also going to give you money, get you in office. Once you get in office, you take the citizens' money and give it to us to do these government contracts. This is kind of the game that's being played. And so I encourage you to figure out the game so you can play the game in a way that works in your favor. So you want to have those write-offs. I think every family should have an LLC. Every family should take itself seriously. Get together. If you don't have a good family, then create one. That's why we created the All Black National Convention. Our team does not do that convention for the money, believe me, because it does not make a big profit at all. If it makes a profit at all, we do the convention so you can get a chance to see each other, talk to each other, connect with each other, and work together and build things together, right? So if you want to join us in Chicago, we meet on Friday. It's not too late. You can hop on a flight. You can hop in the car. It'll be one of the greatest trips of your life. I promise you. You can go to allblacknationalconvention.com if you'd like to join us. Allblacknationalconvention.com. And thank you, Amani, by the way. I see Amani's in the chat. Amani's in our support team in the Black Business School. And so if you want to talk to Amani and ask her any questions, you can email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. Zoe, what's the gold ticker again? Yeah, it's GLD. GLD. And if you look up, that's the gold ETF. That's not the same as the price of gold, right? So that price of gold at 2000 something, that was the price of gold, like, by the pound or by the ounce. Actually, I think it's for an ounce. The GLD ETF is completely different, but it's connected to gold, right? So when gold goes up in value, then this ETF goes up in value. So owning the gold ETF, ticker symbol GLD, gives you exposure to gold. Now, the thing about gold is that gold does not typically make you rich. Gold will not make you rich. Gold is to kind of keep you rich. Gold is not to help you get more money. Gold is to protect the money that you have. Remember, with wealth, it's two things. You got to play offense and defense. It's just like being a basketball player or a football player. You got to have offense and defense. Offense moves the ball down the field. Defense makes sure that you don't lose yardage and lose points, right? So a lot of times the reason people don't have a lot of wealth is because their offense isn't very good and the defense is pretty bad. So if I was to compare most Americans and our spending habits when we end up in the struggle, when it comes to our economics, the offense is bad, right? That means that you're sputtering. The quarterback can't throw the ball. You're not running any plays. You don't have a plan. You don't know how to get down the field. You don't even know where the end zone's at, right? That's kind of what I see. Like most people, they don't know how to get the ball down the field. They never took any class whatsoever. All those years in public school, 12 years in public school, didn't take one single class on how to build wealth. The stuff I could teach you how to invest in the stock market with $5 in 5 minutes. How in the hell is it that they had these kids at school for thousands of hours and didn't once teach them anything about the stock market? So when they're 40 and they meet me and I tell them and I explain it to them in 10 minutes, they're like, "Oh my God, this is earth shattering." And I'm like, it's really not as earth-shattering as you think. Actually, Burton Malkiel in 1971 taught monkeys how to invest in the stock market. He did. He taught monkeys how to invest, and the monkeys were able to make more money than human beings because even the monkeys were putting their money in the market, and they were randomly picking stocks and making more money than people make on the street. It's true. Look it up. The book is called A Random Walk Down Wall Street. So to me, if a monkey can learn how to invest in like half a day, a human being can probably learn pretty quickly too. So a lot of these ideas are not profound. So moving the ball down the field means like football, do you have a plan? You got to run your offense. And do you even have any forward momentum? Like, do you know where the end zone's at? Do you have the ability to get the ball toward the end zone? So, right. So maybe your money is the ball or something, if you want to sort of take that analogy full circle, right? So a lot of us don't have any offense. We just sort of, have our jobs and take our income, spend our income up, and then keep going back to work. But moving the ball down the field might mean you sitting down, making a plan with family and saying, okay, we're not just going to make money here. We're going to make our surplus here, here, and here, right? We're going to get some real estate. We're going to start a business. We're going to buy some stock. We're going to do these things consistently so we can move the ball down the field. That's going to be our offense. We're going to build that wealth, bring in that income, get that money, get that money, get that money. Great. Then you got to play defense. Defense is big, because I think that in Black culture, we're trained to not have any economic defense. That's why, for example, you have people that can come into the Black community, set up a business, and suck up all the money and give nothing back, because we don't play defense. We don't even defend our community. We just say, oh, everybody come in. Whereas if you go to Miami and you go to a Cuban neighborhood and you try to set up a Black-owned business in a Cuban neighborhood, they're going to say, well, why are you here? Why are you taking our money? You can't take our money. We're not going to allow you to do that. Or if you go set up in a Jewish neighborhood and you're black, I don't think they're going to let you come take their money. If you go to a Chinatown and set up a black-owned business in Chinatown, I bet you that you're not going to make a lot of money because they play very good defense as a community when it comes to money. But then also playing defense means targeting your money. It means thinking about your spending, thinking about the areas where you give money away, and you can't sort of give money away willy-nilly and reckless because that's just like a football team that keeps giving the ball away. If you keep giving the ball away, then you're not going to score any points. The other team's going to have 100 points. You're going to have zero. So play offense and play defense, and then you're going to win the game. That's it. The end. All right. So let's see here. Let's see. Tamika says, "What do you think about buying Bitcoin on PayPal? What are the benefits or downfalls?" I think that's fine. I think if you feel safe and PayPal's a pretty good platform. I didn't know PayPal was selling Bitcoin. I think I heard that they were going to get into it. Um, Okay. I mean, I'm not mad at you for that. I'm not. If you own it on Cash App or Robinhood or whatever, just pick your platform. There's plenty of different ways to buy stock. There's plenty of different ways to buy crypto. You could buy stock on Robinhood. You could buy it on E-Trade. You could buy it on Cash App. You could buy it on Fidelity, Merrill Lynch, Charles Schwab, whatever floats your boat. Just as long as you have places where you're acquiring assets and doing it consistently. If you're doing it consistently, then that's how you build that wealth. Let's see. What would you start with $100? Asked Karen Millhouse. I would go to blackwealthmasterplan.com. And at blackwealthmasterplan.com, I'm gonna keep saying it over and over again because sometimes people ask me to repeat URLs. So I just naturally repeat it. If you go to blackwealthmasterplan.com, you will find the $5 a day plan is completely free. And you basically that gets you started right there. And literally, wealth is so straightforward in some ways that if you just did what was on the $5 a day plan and you did that consistently and just, regularly and religiously for the rest of your life, your family would be very wealthy by the time you got a little bit older. It doesn't take a lot of sophistication. And also the other funny thing, here's another funny thing about investing is um a lot of people think that to be a really solid investor, you have to invest in a lot of different stuff. Like you got to be in real estate, you got to be in crypto, you got to be in stock and all that. And it makes it more fun to have these other investments. And it's also maybe a little more secure because your money's spread out. But really, you'd be amazed how much you can do with index funds. There's a lady who wrote a book. I don't know who her name is or what her name is or what the exact title of the book is called, but I know she talked about a concept. I heard it on a podcast I listened to. I forgot what the company is that does that. Oh gosh, I can't remember. I like it. Barron's. Yeah, Barron's. And they called it tidying up your portfolio. And by tidying up, what she was basically saying is that a person could really just own index funds and really get as much exposure as they need to different parts of the economy. Like if you want to make money from real estate, how many of y'all knew this? How many of you knew? Give me a yes. How many of you knew that to invest in real estate, you don't really actually have to go buy real estate? Did y'all know that? Give me a yes if you knew that. How many of y'all knew that to invest in real estate, you ain't got to go buy real estate? Like, I mean, people talk about it. It's kind of a big trend, like we're gonna go house flipping and all this stuff. You don't have to do all that. That's what real estate investment trusts are for. REIT. Big companies have real estate investment trusts, and what they'll do is they'll say, okay, we're gonna buy 20 apartment complexes, and you can own a share of the apartment complexes, which means that when the rent comes in, you'll get your cut along with everybody else who's invested in this thing. And you don't have to worry about being the property manager or signing a bunch of paperwork or finding the property or finding a good deal and stuff like that. There are tons of funds that you can put your money in that will give you real estate exposure. There are tons of funds out here that will give you exposure to crypto. You could buy crypto without really buying crypto. You really could. There are companies like if I own Coinbase, I'm connected to crypto because stock price tends to go up when crypto goes up. Marathon Platforms, Mara, MARA. That's one of my favorite stocks for generating income by selling the stock options. I love that. It's like this delicious tree in the back that just makes these wonderful apples that are all big and juicy, and I just go pick apples whenever I'm hungry. Um, there are a lot of companies out there that will give you exposure to things without you having to actually buy the thing that you're getting exposed to. Like even with gold, you don't have to go buy gold to get exposure to gold. Okay. So just keep that in mind as you invest. Don't overthink it. I think that's the biggest mistake I see people make is they really think that investing requires you to go to school for 1 billion years and understand it cold. No, you don't have to do all that. I understand it pretty well because I was going to be a professor of finance. So that means you have to learn a lot to get there. I know, you have to go through a lot of math classes and everything else. And the cool thing about what I went through, which was very painful, is once you kind of go through it all, you're like, oh, okay, well, as long as you do this and this and this, then you're gonna be fine. Like you can kind of sort through all the BS. So don't let anybody confuse you by sort of giving you too much information. Because if you drown with information, it can scare you to the point where you don't do anything. You just sit there frozen because you're too scared to make any moves. So what I'm here to say is just make a move. Just make the little move, make the simple move. And then maybe later you can make the more complex move. Because there are some complex aspects of investing that can be kind of fun, right? Because investing can also, and it should also be fun and fulfilling for you, maybe educational for you. Like so sometimes I like to buy individual stocks because I personally enjoy watching a company do well and saying to my wife and my kids, like, hey, look, we own a piece of that. McDonald's just made a bunch of money. We own a piece of McDonald's. We own a piece of Starbucks. That creates like a type of pride. And so when you're passing down that generational wealth and you're passing down that generational knowledge and you're passing down that generational culture, your children will grow up saying, oh, I'm an owner of Starbucks too. I mean, how cool is that? How much pride would a black child get with something like I own a piece of Disney. Disney had a hit movie. My stock went up because I had a hit movie with the company that I partly own. These are things that generate a lot of pride, and it also allows them to feel like they're participating in the American dream instead of sitting to the side and just being mad because everybody else has got money and they don't have it. Don't get mad. Get in the game. All right, so let's see here. Grace Stevens says, "Can I buy options starting with $2,000?" Yeah, Grace, but with options, we're going to do options class soon. For those of you that are in the options class, drboyceprime.com. That's the URL, drboyceprime.com. I'm going to send you guys the moneymaker grid soon, and I'll tell you exactly which ones I like the most. But also, is $2,000 enough to get started? With buying options, yeah, you could buy options with any amount of money. Now, if you're trying to sell options, then you might have to use some margin to increase your capital base a little bit so you can own a little more stock. And if you go to drboyceprime.com, there's the whole process of not just acquiring the asset, but fully protecting your assets so that as you make your income, you're not just making money, you're protecting the money. And this is something a lot of investors I don't think enough about is is not being greedy, like making sure that when you get something that's really working, you want to try to take care of what you got going on, right? So this is where wealth protection is really important. In fact, it's not thought about enough. That's why most wealthy families lose all their wealth in one generation. I don't know if y'all know that or not, but 70% of all wealthy families lose everything in one generation and they have to start all over again. And 90% of those families lose all their wealth in 2 generations. In fact, I heard a recent story about did anybody hear about that meat issue where you had the recall of all the meat from Boar's Head, that Boar's Head company? Did anybody hear about that? I think it was called Boar's Head. Boar's Head Meats, they have a really fascinating history. I heard a whole like podcast about it on with the Wall Street Journal. And basically this company was started over 100 years ago and they were big into generational wealth and they created this amazing company and they passed it to the kids and the kids passed it to the grandkids. And then what happened was exactly the kind of stuff I talked about in my book, The 10 Commandments of Black Economic Power. Number one, they started to fight. And when the relatives started to fight, they started suing each other. And then on top of that, as they passed everything down to the kids, the quality of the product started to decline. And that's why you have the PR fiasco that's happening right now, is that based on their assessment, it seemed that they just gave up the idea of making quality meat and doing what they did to make themselves great in the first place. Boeing had a similar issue. It's not a family-owned business, but Boeing first started, they would focus on making the best planes they could possibly make. They weren't sitting around thinking about how they can maximize profit. They just want to make good airplanes. Then they got to the point where they were thinking about the money and not the process and the product. And you saw what happened with Boeing. Boeing has become the white version of Soul Plane. their planes have become garbage. Like if people get scared getting on a Boeing airplane now because there's always all these defects and everything. Astronauts are stuck in space right now because Boeing can't get them back home because the ships they're sending are breaking down. Elon Musk is launching a new rocket every month. Boeing can't even get 20 feet off the ground. It seems like it's kind of crazy. And so basically with the Boar's Head meat people, they are an example of how generational wealth can be depleted and destroyed if you're not very specific about how that gets passed down and establishing the boundaries and the barriers to make sure that that wealth is fully protected. I mean, when I heard the story about Boar's Head, it made me even think about what I'm trying to pass on in terms of my estate plan. I'm redoing my estate plan right now, and I'm trying to protect the Black Business School because I want this thing to be around in 500 years. And I was like, whoo, I got a lot of work to do because I can't predict what the world is going to look like 100 years from now. And so you have to set rules and boundaries to protect that wealth. And if you think about this, why do you think so much wealth gets lost? Why do you think, when grandma dies, grandma's house ends up going to, some company that comes along and buys it for pennies on the dollar? Well, because sometimes the grandkids are knuckleheads and they were never taught how to really take care of wealth. Nobody had a conversation with them about protecting assets. And I had a conversation with a cousin. We had grandma's house, and grandma had lived there for 50 something years. That house is gone. White people have bought it. They gutted it. It looks brand freaking new, and now the value of that house is about 10 times more than what my grandmother's house was worth when she was alive. I didn't know this cousin lived down the street. I just met her last week. I was like, "You're my cousin?" I didn't know that, but I got 1,000 cousins. It's crazy. The Watkins family is big in Kentucky, and it turns out that she said the same thing happened with their house. She said, "Yeah, cousin so and so was living there, and then they didn't do this, and they didn't sign the papers, and blah 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 blah, and then we lost our house too." So think about this. I want you to go through in your own memory and things you've seen, stories about how many times grandma's house gets lost. Well, maybe there's something to that. Maybe there's a financial lesson in there about preparation. What we talked about preparation this morning and what that looks like. And I just really think that eventually at some point you got to learn the lesson or you're going to keep on losing the wealth. It doesn't make sense for kids to start over from zero when their parents also started at zero. They had a whole lifetime to go from zero to something above zero, but then you work, 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 you get above zero, and then you die and you start at zero again. It's not supposed to work that way. Okay. All right. So anyway, let me keep going. Where can you find a real estate investment trust? Okay, so Janine, two things. One, you can log in at theblackstockmarketprogram.com. I have a list of REITs. If you go into what Dr. Boyce is buying, there was a couple of weeks where I grabbed some real estate investment trusts that I personally liked. But also, if you open up your app and you search for REIT, a bunch of them are going to come up. Maybe you can pick a REIT or a real estate investment trust that's associated with a company that you trust. Like I think Charles Schwab has a real estate investment trust, things like that. Let's see here. What do you think about MicroStrategy? Omar asks. I like MicroStrategy a lot. I think I own some shares of MicroStrategy. Yeah, I like MicroStrategy. MSTR. MSTR is the ticker. What's the best way of giving the knowledge of investing to my kid if they don't live with me? I really want them to learn as much as possible. Well, just because they don't live with you, right, doesn't mean you can't talk to them. And I'm a big believer in what I actually we came up with this in the Black Business School. It's called conversational learning, right? So we did two things in the Black Business School, among many that I think is cool and innovative. One was we created the first ever Black financial therapy department. There's nowhere you can go to Harvard, Yale, any HBCU and find any academic department with PhDs in it that is focused specifically on the psychological barriers to Black wealth, why mentally Black wealth is depleted and does not grow. A lot of it is if you talk to therapists and psychologists, they can connect trauma and all the other things Black people go through that causes our wealth to be depleted. Second thing is conversational learning. So conversational learning is just talking to each other, right? I don't lecture my kids like in terms of like pulling out the chalkboard and saying, here, I want you to learn this and this and this. It doesn't work. Kids don't listen. Kids are goofy and stupid and they have no concept of money half the time. No, they're not stupid, but they can be. They can be a little crazy. Their brains are not fully developed till they're 25. I just talk to them. I talked to him. And I remember something that Pastor Kevin Cosby said once. He's in Louisville, Kentucky. I like the guy a lot. He's very smart. He's an HBCU president, by the way, of Simmons College. And Kevin's a friend of mine. We've known each other 20 something years. And I heard Kevin once say, before you correct, you must connect. So my thought with conversational learning is that I can transfer a lot of knowledge to you by talking to you and just talking about life, because life itself is a big university. You go to universities to study life, you know, and when I'm talking to you, I got to get you to listen to me. And in order for me to get you to listen to me, I have to understand you. I have to let you know that I care about you. That what I'm saying is not the most important thing happening in this conversation. What you're saying matters too. So once I get to know you and I show consistency and I show I care about you, then it's when it's my turn to talk, you'll listen to me and I can share some knowledge with you and help you out, give you some game, and that's worked pretty well. Um, all the kids in my house, I actually I picked this up more so from being a bonus dad. When you marry a woman, you marry the woman, the kids ain't married to you. The kids are like, well, you love him. I don't know this guy. So I had to form individual relationships with them and look for opportunities to share ideas with them. And so, for example, if you come to the All Black National Convention, you'll meet all of our kids. All of them love coming to the convention on their own. And but they have a great dad. He's a great guy, and I know him well. And we're cool. We're very cool. We all work together to raise the kids. And the relationship we established was just one that came from just me listening, and then now they listen to me, right? And then also the learning tends to happen best when they get exposure to certain situations that maybe lead them to ask more questions, right? So once they get a little older, they tend to be different. Like I found that like with one of my other kids, I have a bunch of adopted kids. I have one biological child, and I have several adopted kids that I just kind of just grasp onto because I like kids. I think kids are great. Um, and anyway, she's 34 years old now. She's married, and she calls me about twice a week. And one thing I noticed about her is I jokingly said to her, I said, you were really hard to talk to in high school because high schoolers are just on another planet sometimes. But when you went to college, she went to Columbia. I said, when you went to college and I would come to New York and we would start talking, we would have the best conversations, and the reason I think it was better was because she was in college around college professors, and I'm a college professor, so it was more natural for us to talk about serious issues and world events and things like that. And so that opens that door for more communication. But I think conversational learning is better and looking for those opportunities. So, for example, if you are in line at McDonald's, I'm not judging. Pretend like McDonald's is not unhealthy, horrible food, right? Some of y'all eat at McDonald's. I'm not going to shame you for that. But let's say you're in line at McDonald's, you can turn to your kid and just kind of say, "Hey, let me show you a trick. You know that we can own a piece of McDonald's in 3 minutes while we're in line at this drive-through." And then they're going to want to know how, and you just pull out your phone and you buy like $10 worth of McDonald's stock or whatever you can afford at that time, and just say, now, okay, now we own McDonald's. That's going to stay with them. That I did that for one of our daughter's friends, and she was 17. And it's really hard when you're an old man. It's hard to be cool to a teenager. It very rarely happens. You're usually, just by definition, you're not cool at all. But I showed her. I said, "Hey," I said, "Yeah." I said, "If I wanted to own Chipotle, you want me to show you how I can own Chipotle?" She said, "How can you do that?" I said, "Well, let me show you." And I said, here are the shares. Here's how much they cost. I'm going to buy 2 shares of Chipotle, and then when I get done, I'll be an owner of Chipotle." And I showed her, and she goes, "Whoa, that was so cool!" And I'll tell you, I felt really good. I was like, "Look at me being cool." I wasn't even cool when I was a teenager, let alone like when I became an old man. But like little things like that give you that opportunity to show them things. And then when they get older and they run into like financial stress or challenges, or maybe they go to work at a job and they hate the job, that's when you can introduce them to the fact that, look, it doesn't have to be this way. There's other things out there. And maybe you bring them with you to the All Black National Convention. That's another little trick too, is sometimes your kid is not going to hear what you tell them. They need to hear it from somebody else. So bring your kid to us, bring them to the convention, and have them around a bunch of other people, a bunch of young people their age who are thinking that way. And then next thing you know, they're going to be doing it on their own, because everybody likes money. Everybody likes freedom. Everybody likes happiness. So I'm not trying to convince you to do what I do. I'm trying to convince you to do what I know you want to do. You want to have money in your pocket. You don't want to be broke. You want to be free. You don't want to be incarcerated, and you want to be happy. You don't want to be sad. And what you'll find is that when people are struggling financially, they do not feel free. They do not feel happy. They're very depressed. They're very stressed out. Who in the hell wants to live like that? So don't they, you're not selling them nothing. You're just exposing them to a solution that if they apply even just a little bit, it's going to make a massive difference for them. So don't try to sell it. Just wait for the right time. God will bless you with that opportunity to share the message they need to hear. But unfortunately, sometimes sometimes we could be knuckleheads. Sometimes you got to hit your head against the wall a few times before you learn, like, okay, this is not the path for me. All right, so let's see here. Chanetta says, I want the pride of ownership and participating in the American dream. I have an index universal life and was told that is all I need. What do you think about the IUL? I like the IUL. Now, is that all you need? I don't know. It depends on the person. But an IUL, to me, index universal life policy. Again, I'm not an expert on these things. Maybe I don't know if Aisha Verzi's in class or not, but Aisha is a student in the Black Business School and just one of my favorite people. And Aisha, if you want to share your phone number where people can call you and talk to you about IULs, you can do that. If not, if Aisha is not here, you can actually go to drboyceoffers.com, drboyceoffers.com, and she's a member of the mastermind. So I put her phone number up there for anybody to call and talk to her if you want to talk about index universal life policies, things like that. But anyway, IULs are fine, but I don't own one. Right. So I don't own one, not because I think they're bad. It's that I have other investment opportunities that I like a little bit better that fit my style a little bit more. But IULs, pretty much for the most part, are scenarios where you do have a wealth building opportunity because you're doing one of the most important aspects of wealth building. You're engaged in basically consistently funding what is called an annuity, which is a consistent set of payments of about the same amount over a long period of time. You have an annuity that is working in your favor. And that is the key to wealth. It's no different from driving a car. If I want to drive 3,000 miles, I can't drive 3,000 miles in 2 hours. That's not possible. And so when somebody expects to get rich overnight, that's what they're literally saying. That's what my brain hears. My brain hears, okay, so you're telling me you want me to drive you 3,000 miles overnight. I can't do that. Or in 2 hours, that's not possible. But if you give me a month, then it's easy. It's very easy to drive 3,000 miles in a month, right? And so the same thing is true with wealth. If somebody says, I didn't prepare for retirement, I retire next year, how am I going to have enough money for retirement by next year? I'm like, well, maybe you could rob a bank or something, but standard wealth building practices aren't going to work because you're missing the key ingredient. The key ingredient to wealth building is time. And it's time where you're consistently applying the same methodology over and over and over again. So here's where we can go with an IUL. IULs are nice because you're consistently putting money into this account, and over time, it's building something. What happens is, from a lot of them that I've seen, I'm not going to try to define them all because I'm not an expert. I'm not a finance professional in that area. But basically, from what I understand, a lot of them will minimize the risk for you. They'll tell you you can never lose money. You'll always at least make money, or at worst, you'll just have nothing, but you'll never lose money, which gets rid of that negative side of the stock market. But because the world has a natural symmetry to it, and there's no such thing as a free lunch, then you also have a cap on how much money you can make, right? So yeah, you're gonna miss the deep the deep dark side of the stock market, but you're also going to miss the upside. You understand? So you're going to miss the rain, but you're not getting the sunshine either, right? And the sunshine is beautiful in the stock market. Literally, when they did research studies, and what they did was they said, what if you invested and you missed like the best 10 or 20 days of the stock market over a 20-year period? Let's say you did every day except for the best 10 or the best 20 days. That would have a dramatic impact on your ROI, that the amount of money you would make would be far, far less because you missed those 10 or 20 days where the sun was shining the brightest and the most money was being made, when stock prices were doubling overnight, all that other good stuff, right? So IULs do take something away, but they take away two things. They take away a little bit of the bad. They also take away a little bit of the good. But here's why I like IULs. IULs are great for a lot of people because they're better than nothing, right? IULs are like, if you show me like a polyester suit or something, I'm not gonna buy a polyester suit, right? But if your choice is either put on the polyester suit or walk outside naked, then the polyester suit is an excellent choice. Do you see? So most people are financially naked. They don't have anything. Do you follow what I'm saying? Does that analogy make sense? Most people are financially naked. They're not investing in nothing. Their only thing they're investing in is other people. The only people they're making rich are they're making the car dealer rich because they're giving him an annuity. An annuity, remember, an annuity is a fixed set of payments of a certain amount over and over and over and over and over and over and over again, right? So they're making the car dealer rich, giving him an annuity. They're giving an annuity to Verizon at the cell phone company. They're giving an annuity to the landlord, paying the rent every month on time. They're paying these other bills on time. Annuity, annuity. You get an annuity. You get an annuity. You get an annuity. And the only person you didn't point to was yourself. If you're gonna make all these other people rich by giving them annuities, why not start with you? So an IUL to me is great if you have nothing else going on, because it's that one annuity, that one fixed payment every month that's going to put money in your pocket, that's going to put wealth in your family. Do you follow me? Right? So if you are not investing consistently, then yes, an IUL is good. Because what happens is that and I think it's culture and mindset and everything else and what's marketed us. Um, a lot of us don't are not just raised to believe that it's necessary to have the discipline to consistently invest for ourselves every month. We're just raised to believe that that's not necessary. You're trained to go to work every day. You're trained to feed your kids every day, stuff like that. But maybe watch your favorite show every week. But we're not it's not impressed on us that it's absolutely essential for anybody who wants to be financially safe. It's absolutely essential that you're doing something for yourself financially every month that is going to add to your long-term economic benefit. We're on the verge of arguably the greatest retirement crisis that America's seen in at least 120 years. That's happening right now. It's already begun. Most baby boomers are not ready for retirement. Gen Xers definitely aren't ready for retirement. And if you go down to millennials and Gen Z, they're even worse off than that. Part of the reason that that's happening is because back in the 80s, you had a guy named Ronald Reagan who said, instead of all this money being spent putting money in people's pension plans, let's let them have their money so they can then invest in these 401ks. Now, in theory, that could actually work. If everyone had the discipline to max out their 401k and be very consistent, then everyone would have plenty of money for retirement. I know people who've done that. That's what my wife has done. My wife is a really big saver, and when she got her first job, she asked her daddy, "What should I do with my 401k?" He said, "Max it out. Whatever the matching plan is, max it out." And that's what she did. Very simple. She never took a finance class, doesn't think about money, doesn't care about investing, but this lady ain't broke because that 401k has been stacking chips for many, many years. But most people don't do that. A lot of people don't do that. Or if you give them the option to go in and grab some of that money out of the 401k, a lot of people do. They don't max out the 401k. I'm not making fun of anybody. It's because it requires self-discipline. And because we've leaned on that as a society, a lot of people are not ready for retirement. And that's going to be really bad. It's going to be really ugly when that happens. So IULs are cool because IULs basically give you kind of like a pension, and I think it's great. I think it's great if you have nothing else. I don't do IULs because I have a bunch of other stuff going on, and you can't invest in everything, right? So, that's my opinion on IULs. That was a really long-winded answer, isn't it? But by the way, I do actually have a retirement preparation plan. If you guys want to take a look at it, you can go to drboyceretirement.com. That's drboyceretirement.com. And you guys can take a look at that if you are. I think I did a special event, a training on how to get ready for retirement and the things you want to understand about retirement. and why it's important to start investing for retirement even when you're young. A lot of young people don't invest for retirement because we are short-sighted. We don't have the consciousness to think long term, and also because we don't see the benefits that a young person has uh, for saving for retirement at an early age. There are massive benefits to that, not just because you're going to have more money when you get older. Because every study shows, like, if you just wait an extra few years, like if you start at 35 instead of 25, you're going to lose so much money that it's going to be almost impossible for you to catch up with where you would have been if you started 10 years earlier. But then the other benefit is that, remember, when you're investing in that 401k or that IRA or whatever, that money's still yours. That money's yours. That's still part of your capital base. That's still part of your financial security. So if worse came to worse, if you decided one day that you hate your boss, you want to tell him to kiss your black butt, you've got some money backing you up. You've got a big economic bouncer that's protecting you from all the consequences that will occur if you quit your job when you ain't got no money. You better not talk down to your boss when you need the money, but when you get the money, you can say whatever you want and walk out the door and know that you're not going to be homeless, your kids are not going to starve, and you're going to be okay. So that retirement money can be part of that financial security because you can borrow against your asset. This is one thing that rich people do a lot. A lot of wealthy people, they engage in a plan called buy, borrow, and die. So basically, the buy part means that they accumulate assets. That's what rich people do. That's what you're doing when you buy, when you're investing in IUL. You're just accumulating assets, right? So they buy stuff, and so there's a whole lot of stuff they have. That's what makes them rich because they have more than everyone else. And then they don't sell stuff when they need money. What they do is they borrow against what they own. They just go to the bank, get a loan against it, and then they can go buy things. Elon Musk bought Twitter because he used his Tesla stock as collateral. And so he borrowed against his Tesla stock, which he hadn't paid taxes on because it was an unrealized gain, and he was able to get enough money from the bank to go buy Twitter, right? So they borrow and then they die. And then when they die, what they have is what they call the stepped up tax basis. And this is kind of like the reparations argument, really. You know, in reparations, you know how people always say, well, why should I pay reparations? Because I didn't own any slaves. Well, it's kind of the same way, except it's like a tax version where literally when you die, your kids are not responsible for any tax debts that you would have owed if you were still alive. So the mere idea that you simply passed on and passed the assets back to the kids means that the kids can say, I don't owe any taxes. I don't. I do. That was daddy. Daddy don't owe no taxes. Daddy now he owe now what he you got to go to heaven to get money from him, but you can't get it from me, even though I'm living in daddy's house. You understand? And daddy bought this house for $100,000. Now it's worth 2.5 million. And I ain't got to pay no taxes on any of the capital gains that occurred during the life of daddy because me and daddy are not the same person, even though we all know what it is. We know it's a big game that rich people play and they get away with it, right? So and this is actually, if you want to think about a reason why, I'll admit a bias and say this is one of the reasons why I might lean in terms of supporting Kamala Harris in this area is that the Democrats theoretically want to kind of end some of that. They want to get rid of some of those loopholes. Okay, I haven't seen the Republicans fighting to fix any of that because they tend to represent the rich. Okay, but you can decide who you want to vote for. I told you I don't care about that because I don't think it matters. All right, so yeah, thank you, Amani, for sharing that link. Yeah, I think it's drboyceretirement.com. Is that what does that URL work? Is Dr. Boyce Retirement? I hope it works. If it doesn't work, then let me know. But yeah, drboyceretirement.com is where you can go to take a look at the retirement plan that we have. There we go. Yeah, yeah, it's a retire rich and early, the Dr. Boyce blueprint. That's what you're going to see when you get there. You'll see a message from me on the page in terms of what you're going to get, and there's a whole large curriculum there, and you can buy it one time, and once you're done, it's yours for life. So feel free to go to drboyceretirement.com if this is of interest for you. All right. Amani says the link does not work. Oh, it worked for me. It worked for me. But either way, if it doesn't work, thank you, Amani, for sharing that direct link. So I'll share the direct link as well for those of you that need. Or Monty already put it in the chat, so my apologies if you tried it and it did not work. All right, so anyway, all right, so let's I'm gonna go ahead and answer a few more questions and we're gonna bounce out for today. And I hope that this discussion's helped you today. I hope that you are benefiting from what we're talking about. This is stuff that I'm passionate about it because I really believe this is a solution that works. I find that black, brown, or any other group of people, when you have enough wealth and you're financially secure, it enhances your life in a lot of ways. It helps you breathe easier, and I think this is a wonderful gift to give to your children because then they get to truly live life and not just be stressed all the time. You know, Being broke is hard. I was broke. I don't want nobody else going through that. All right, so let's see. Mary says, "Thank you for sharing your wisdom. You're absolutely welcome." Shanita says the death benefit. Yeah, there is a death benefit that's also connected to a lot of the index universal life policies. Absolutely, I did not mention the death benefit, but that is part of it as well. It's blended. It's sort of bundled with life insurance and an investment strategy, but you can unbundle that, right? So you can get some term insurance. This is what I do. I buy term, and then I take the rest of the money and I invest it. So the money I would have spent buying an IUL or a whole life, I just invest that money on my own and it makes money for me, but you got to make sure you invest it. So that does require an element of self-discipline. But if you are self-disciplined, then you tend to have more flexibility and freedom. You can choose where you want to put your money, and you can also get a piece of that big fat upside with the stock market. Remember, if you miss the extremes of the stock market, the extreme upsides, you're kind of missing a lot of the wealth that's created. A lot of people don't know this. A lot of people are so scared of a market crash. And I just tell them, why would you be afraid of a market crash? That's when everybody gets to eat. Like the whole hood is eating good when the stock market crashes. As long as you know how to hold your breath, hold your breath, hold your nose, buy those cheap stocks. It does take, you feel a little nervous because you're worried that it's going to keep dropping. But when you go in there and you're buying these stocks at half price and then they go right back to the price they should have been in the first place, you make a killing off of that. I love when the stock market crashes because that is the best opportunity to invest. Warren Buffett is sitting on $168 billion in cash that he doesn't even use because he's pretty much waiting for the market to crash. He's waiting for a discount. Like any other cheap person. He's waiting for a sale. So when the sale happens, if you've got cash sitting on the sideline, just sitting there waiting, like little soldiers waiting to go to battle, that cash can put you in positions where you can own a lot of stuff really cheap. And that's how people get wealthy. That's how people make money in their sleep. You buy something cheap, and then when the value goes up, your wealth goes up, and you're not working. You're not getting up and doing anything to make it happen. You're just getting wealthier because you have asset appreciation. That is where you get rich. That is where wealthy people come from. Buy low, sell high. It's really that straightforward. All right. Last question. When you say maxing out 401k, what percentage would you recommend? I think that in terms of maxing out, a lot of companies will have a matching plan. That's what I mean by matching out. So they'll usually say, we'll match you up to X amount of dollars. I think that when it comes to tax deferred retirement plans, I think putting in the maximum amount is a good strategy. But yeah, and if the company says they're going to match your 401k, you're missing a massive investing opportunity when you don't do that. And this is where culture gets in the way. And in my book, The 10 Commandments of Black Economic Power, I talk about economic culture and I talk about that TV show Black Jeopardy or SNL when they had that skit called Black Jeopardy. And I've talked about this because it infuriated me. Leslie Jones, who is very funny, very talented, but she does a lot of stereotypical buffoonery. I can't I can't co-sign on that. I'm sorry. And so on this Black Jeopardy episode, the question was, your boss tells you that they're going to take $50 out of your check to put it in your 401k, and she says, you better give me my money so I can buy me some scratch offs. And it was like hilarious because, like, yeah, we know black people are stupid. Black people don't want to invest no money. Black people don't have no discipline. And I didn't think it was funny. I was kind of annoyed because I was like, but that's why we broke, and that's why we suffer. That's why little Pookie's out here robbing banks and gang banging because didn't nobody leave him nothing. Your daughter is crying. Your daughter's sleeping with a fat, dusty 55-year-old man right now because she can't make $500 more for the rent every month. I don't want my daughter to catch STDs because she can't pay the rent, right? Like that's not. But I don't want my son going to Diddy parties because he's struggling. I don't want my kids to suffer. And I think that's universal. I think any of us that got kids, grandkids, or even if you are a kid, you don't want to pass pain and suffering down as a generational curse. You want to pass down generational blessings, right? So I'd say that's the point we can leave on today, and give us something to meditate on. Don't pass generational curses. We stop them in their tracks. You exterminate those curses, and you replace the generational curses with generational blessings. You want your child, your grandchild, when you die, to say, it was such a blessing that this person was in my life. It was such a blessing that Shaquana was my grandma. It's such a blessing that James Keller was in my family, because now my life is better because that person was here. That's what, at least that's my dying wish. That's what I want. I'm not scared to die. I'm just scared to die for nothing. And I don't want to die as a sucker. I want to, when I die, I want people at my funeral to say, my life is better because Dr. Boyce was in it, or because Uncle Boyce was in it, or Grandpa Boyce was in it, or Cousin Boyce was in it, or my friend Boyce was in it. Whatever category people fit into, including the people that are in this room that I'm talking to you right now, I'd like for you all, when I die, I want you to be at my funeral or watch the funeral online, whatever they do. I have no idea. I'll be dead. I won't care. And I want you to be able to say, my life improved because this man existed. And that's, to me, that I'll be in the casket with a big smile on my face. So anyway, God bless you guys. I hope you guys have a wonderful day. Thank you so much for hanging out. And one more announcement I want to make is, this week the All Black National Convention starts Friday. If you want to join us in Chicago, just go to allblacknationalconvention.com. We are sold out of President Circle and VIP tickets, and the B1 ball tickets are sold out, but there are some general admission tickets available if you want to be a part of it. It's a big Black family reunion. It's amazing. It's not thousands and thousands of people. It's a cultivated space with a few hundred people that all believe in being upwardly mobile. So if you are a person that wants to improve your life, then it's for you. If you want to improve your health, it's for you. If you want to improve your mental health, it's for you. If you want to improve your relationships and your family, it's for you. And definitely, if you want to improve your wealth, we got you on that 100%. We can take it to the next level. So feel free to go to allblacknationalconvention.com. And then last but not least, I want to mention that because many of you had asked me about estate planning and we want to dig into this more deeply, we created a new program in the Black Business School, and it's called LIFT, and it stands for Legacy Investors for Tomorrow. So the Legacy Investors for Tomorrow group is basically individuals that want to understand how to preserve their legacy. You want to understand how to do estate planning. We're going to bring in estate planning experts every month. We have an entire curriculum on estate planning. You can take a little exam on it to make sure you understand it if you want to, and get a certificate. And so it's part of the Dr. Boyce Academy, which is connected to the Black Business School. If you would like to participate in that, the URL is drboycelift.com. Let me make sure it works. drboycelift.com. So it stands for Legacy Investors for Tomorrow. And the monthly access fee for the program is $89. And for a limited time, those of you who are in this group can get access for $29 a month. And that is your price now and forever. It will never change. You will be a member, or as long as you're a member, that will be your fee, $29. Or actually not even 29, it's actually $26.70, because we took 70% off, but it's only for the first 200 people that join. And that number is pretty much halfway filled up. So if you're interested in that kind of thing, you can go to drboycelift.com and feel free to sign up today. So anyway, guys, I'm out of here. Have a great day. God bless you. Thank you guys for listening. It's always an honor and a pleasure to speak with you. And I'm